Hello guys, welcome back again to Mali Forex channel. Today I'm going to show you guys how to analyze Euro USD. I'm going to show you guys how I catch my profits this week. Okay, let's go. So obviously now as you can see here, the reason I make this arrow here is normally this is an uptrend bullish. Yeah. So when the market is go obviously down, it goes and break that liquidity. You need to wait the market to come back in this area where normally some people call key levels in this area, but obviously somewhere around that area it could be a fair value gap or the last bullish, bearish candle, where you call it demand or order block. Okay, so now when the market come back into your order block or fair value gap or demand, you put your entry from here, place your stop loss literally below the demand or the order block, just the wick below it, and your target is going to be up to the other high, the previous high. So you know your target at least is going to be 1 to 2, or even if you can catch 1 to 3, 1 to 4, it doesn't matter. But at least the last previous liquidity is your target aim. Okay, so guys, now let's go now and then move to the chart. Okay, so now this is the trade that we had this week. So Friday was the highest. Last Friday of the 14th of February was the highest of the previous week. This area I call Friday. There is a Friday key levels, yeah? Or you can call Friday liquidity or previous high, whatever you can call. There's a lot of names you can call yourself, but I normally call it my Friday key level of a previous Friday. And I'm waiting the Monday to either take the liquidity of the Friday or the previous key level Friday, or if it doesn't take it, take the liquidity of the previous Friday low, which is here. Okay, that was the lows of the Friday. And now I'm also going to put it on same as I put it on key level of the Friday or the liquidity of the Friday low. Okay, so now what did Monday do? Monday did not take the buy side liquidity of the previous Friday. And if you normally I don't take trade on Mondays because like I said, Monday shows me the way of the week. If the Monday take the liquidity of the Friday, I am definitely waiting Tuesday now to either take the liquidity, the low liquidity or the high liquidity of the previous, the Monday high or the Monday low, and then I know what direction I'm going to go to. Okay, so now in here, what you can see, um, you can see Monday was obviously going down and it didn't take the liquidity Friday key level. So now what we need to wait is you look at a fair value gap from here. So now wait, I'm gonna go back for you guys to see what is happening. Yeah. So now this is a Monday. Yeah, this is a Monday. We're gonna do a replay. We're looking for a fair value gap. If you obviously come back down, you see you come back down. You came back down. Now we have a fair value gap here that we can literally go back to 45-minute, 15-minute, and there you go. There's a fair value gap here. I'm gonna highlight for you that fair value gap point. This is the fair value gap, fair value gap point, and your target is going to be 1 to 2. Don't get too greedy and say, you know what, I'm aiming 1 to 3, 1 to 4. Yes, you can do it if you wanted to, but normally I say anyone who wants to catch easily, your target hit on time, 1 to 2 is the best you can do. Okay, place your target here, and now we're going to play. You see, there was a two fair value gaps. There was a one here and there was a second one here. So obviously, if you already have another one there, you can always place your stop loss literally above there so you can stay safe. But again, at the same time, 1 to 2, you're risking always 1 to 2. So you know whatever your stop loss is about maybe whatever you want to risk on £50, £100, £200, £1,000. But it depends on your account, how big your account is. But make sure your stop loss, where to put it on. Don't just put it on any random places. Make sure you put it on a place where you think if the market literally don't respect this fair value gap, it might come into the next one and it will go down. So now we'll see if it's going to give us a target. Yeah, it's coming back up again. It's coming back up again. And this is still Monday. Guys, we wait, and if the Monday doesn't hit our target, we'll wait for the Tuesday to hit our target. But we know at least this is a downtrend. Now, Monday is not taking this high. Tuesday now is going to obviously come up. In Tuesday also, we can see a lit fair value gap here. So you can take another entry here on Tuesday. There's a 2. Either here you can take. And remember, there's another lit fair value gap there. Make sure your stop loss is literally in a safe zone. 1 to 2. 1 to 2, 1 to 2. Okay. So now we have a one already trade going for us that is already close to our target. It literally hit that one for us at the beginning. Come on. That one already hit it. So now we need the next one. So we already took a profit now on the first one that we took on Monday. Now we'll see what the Tuesday is going to do. Now Tuesday is coming to our way. And a lot of you guys, when you see a big bounce like that, you'll be like, oh no, you know what? It's going to take me out. But no, sometimes what the market does is when it goes back down and it leaves like bare liquidities here next to each other, like wicks, what the market do is take, because some people will literally place their stop loss here. So some people would be entering this trade from here when they see this market is going. They would be like, oh, you know, I'm going to go in from here and then place their target. This liquidity is here. And what it's going to do, take them out and continue going down. So obviously you don't overtrade or take trades any opportunity that you see. Make sure you follow the day, how exactly the day is moving for you, or the first fair value gaps that you can catch up from. Yeah, boom, we hit the second one. Yeah, that is our second target. So now Monday and Tuesday we both made profit because we seen Monday was not taking the liquidity of the Friday high. So that's what we knew. If the Monday was coming down and we see a fair value gap is coming down and literally closes bearish candle, we continue obviously looking for bearish for the next day, Tuesday, to take the liquidity of the Tuesday. Okay, I mean of a Monday. So now this is Tuesday. The Tuesday took the liquidity of Friday low. Now we need to see obviously a reversal, but we need to check what is going to happen, because you can't just go back in unless you see these are key levels here that I already highlighted. If this market goes back in and break this liquidity here, we need the market to come back in this key level for us to be taken buy position. Okay, so you need this liquidity to be clearing out. So let's see what happens. You wait. Don't say, oh, you took a trade, I'm going to jump on another trade. Don't keep jumping in. Now Tuesday ended here. See this line here? Tuesday's ended, Wednesday now started. So we'll see what the Wednesday is doing now. Okay, it looks like it's obviously going back, but there's a fair value gaps here. So I know some of you guys will think like, oh, you know, there's a fair value gap here. You know, this area. Let me show you here. There's a fair value gap. You could have taken entry from here to go down. Some people probably would do, but me now, I've already hit my targets. I'm gonna wait either this one to take this bad liquidities on this side out and show me is a reversal. Come back in here, and then I'm gonna look for buy. But we'll see what happens. Continue going down. Continue going down. So somebody now could have make a profit in here as well. I didn't take that trade, but somebody could have take a trade from here again. Place the stop loss there, 1 to 2 again, and hit that target. Yeah, but I didn't take that trade, so we're gonna leave this one. I will just wait until the market come back and then show me a change of director or direction or change of characters. Yeah. So now this is Wednesday, guys. You see again, somebody could take an entry from here. Somebody could take a fair from here. There's a one fair value gap. There's a one fair value gap here. So there's two. Remember, always if you're gonna enter from the first one, don't just put your place stop loss here, because I know some of you guys will literally do that. Just be safe. Just be safe and aim 1 to 2. It's not hard. It's not hard, but we'll see if that is gonna go or if it's gonna take us out stop loss, and then at least we have one loss for the day, and then we'll continue looking for bullish after that. So now that's Wednesday. Now another day started. So now Thursday started. So Thursday now hit the stop loss. You see, whoever was gonna take this trade continually thinking it's gonna continue going down, it already took the liquidity here. Now I'm gonna show you something that you need to focus on. If that happens and it hit your stop loss, what is happening? What caused this trade to go back in that way and make a big rejection from here? We have an order block or demand, what you call it here. Boom. Yeah. I'm gonna zoom in for you so you can see it, and I'm gonna keep everything as it is. So in this area here, this big bearish candle here, that massive one here, you put from the wig to wig. I know some people normally like to do body to the body, or maybe from here they say I'm gonna put to the body here, but no, that is not what I do. I make sure I cover the whole thingy candle, and in this area here, I call it I wait, and I wait for point of interest in the middle line. That's my discount level. I don't. I know some people normally take trade from here. Some people would take trade as soon as you hit the first top line. Some people normally take from here and say, you know what, oh, it came in halfway through. But me, I'll wait until it comes to my what? Point of interest. My stop loss literally below here, and my target now is going to be where? Either that key level that it dropped off from, or all that liquidities that the market didn't clear from the last Tuesday. Yeah, so that is 1 to 2 again. And let's see now what's going to happen, guys. Okay, we're gonna wait this trade. So Wednesday ended there. Now it's Thursday. We'll see what the Thursday is gonna do for us. And in Thursday, anyone who wants to take a trade in Thursday, you see now when the market rejected from here and it obviously continue going down, we'll keep that loss that we had in there. Whoever would continue from that fair value gap, but that fair value gap and this fair value gap on the left, you ignore it once the market break it fully, so it's not valid anymore. So the one that we are waiting now is this fair value gap. Yeah, you should be waiting either this fair value gap, the market to come back in for you to be taken long. If not, if you obviously break that key level and continue going up. So we'll see. Oh, yeah, there you go. Boom. So now you obviously broke the key level of the previous Friday. Now we start looking for buy and place a stop loss below these liquidities. That candle closes there, and we place a stop loss as it is. And where we're gonna target now, 1 to 2. The order block, or you can call this one supply. Okay, that supply 1 to 2, guys, 1 to 2. But even if it's a 1 to 2 point something and it's paying you, is fair enough, but we'll aim that level. Boom, you hit our target, and you can see now we also had that target. The reason we took that trade is what? Number one, it hit our first point of interest level from the demand, and obviously it was going to be bullish back on towards that way. Now we'll see obviously this trade if it's going to take the Monday high or if it's going to take the previous high, previous Friday that the Monday didn't talk out. Let's see. And it's Thursday, so we'll see what's going to happen again. If a Thursday shows us that it took that liquidity and it rejected it, then we're going to take for sell again. Now, what do you see here? Now you see the trade obviously is trying to go towards there, but it started rejecting coming down. Now, okay, fair enough. You have a fair value gap here. And that is what? Friday. Next day. You have a fair value gap here. You're going to say, I'm going to enter from here as it is. Place your stop loss literally above the key level. In case if you take out that key level, then you know It's definitely obviously continue going up, but your target is what? 1 to 2. Just aim 1 to 2, just to see what you can get from this trade again. You came into the fair value gap. You see, the reason I said to you, put your stop loss in a nice, beautiful space. I know some of you guys will be like, now, why am I going to wait all the way here? I'm going to put my stop loss literally above the wick here. You can do that if you want, but why would you want to make yourself, like, literally want the market to take you out and show your direction that is correct where you was aiming? So make sure your stop loss is literally above the liquidity and just aim 1 to 2. It's not hard. If you're looking to lose £50 and you're looking to win double of £50, then why not just wait? Believe your process. We'll see now what that trade is going to do for us, and then we'll be done for the week. It's coming close to our position. It's reversing back. Boom, close. Boom, we're at our target. Bam. See that? So how many trades we had win today? I mean, on that week, we had 1 win, we had 2 win, we had 3 win, we only had 1 loss, 1 win, 1 win. So 1, 2, 3, 4, 5. We would have a 5 wins and a 1 loss. So think about it. Every trade that we was taking, 1%, 1%, that is 2, 1% is 3, 1% is 4, 1% is 5. So if I were to lose 5 times of a 50, I would have lose what? 250. If I were to win 2, 2, 2, and 2, and 2, how much is that? Is 11 or 12 times, yeah, of wins of whatever 50 you was looking to lose. You would be making, obviously you do the maths, because I'm not good with maths, I'm only good with money. Okay, so that's all I was showing you guys, and I hope you all understand. And if you guys want to see more trades like this, or how I analyze my trades, subscribe my channel and please like. See you guys next time.